Good morning, dears, and welcome to Super Coaching for UPSC by Textbook. And I am Pradeep, your economy mentor. Dear student, you may be knowing that India has signed Trade and Economic Partnership Agreement with EFTA. EFTA refers to European Free Trade Association. So recently, India has signed a trade and economic partnership agreement with European Free Trade Association. So today we are going to discuss this trade pact in detail. So let's start our session. So first of all, let me tell you that EFTA constitute 4 nations, that is Norway, Iceland, Switzerland and Liechtenstein. So there are 4 European nations. They are part of European Free Trade Agreement. They are not part of European Union. That they have separated an agreement that is known as EFTA, and that EFTA is European Free Trade Association, and it is association among 4 nations, and those 4 nations are Norway, Switzerland, Iceland and Liechtenstein. So let's focus on this news. So first of all, let me tell you that what is EFTA. When we talk about the EFTA, this is intergovernmental organization. It is intergovernmental organization which is established in 1960, through Stockholm Convention. That means it is association among 4 nations, and that is for the promotion of trade among the 4 European nations, and it was established in 1960 through Stockholm Convention. The objective of this association is to facilitate free trade agreement and economic interaction, economic integration among the member both within Europe and outside, that is throughout the world. So we can say that the objective is to facilitate the free trade agreement among the member nations, and member nation on one hand and other nations throughout the world on other hand. So this is the objective, and as we talked about, the members are Iceland, Liechtenstein, Norway and Switzerland. When we talk about the functions of EFTA, this is organization works along with European Union. That means it is not, these 4 nations are not part of European Union. Be very clear, they are not part of European Union. They works, or the organization works alongside European Union, meaning they are not member of European Union. Second is, that means unlike European Union, it does not function as custom union. That EFTA is not a custom union. That custom union, let me tell you that what is the meaning of custom union. When we talk about the economic cooperation and integration, when we talk about the economic cooperation and integration, there is, first of all, there is preferential trade agreement. After that it is free trade agreement. after that it is custom union, after that it is common market, after that it is economic union. So this is nothing, that means these are the, that means hierarchy of economic interaction among the nations. So first of all it is preferential trade agreement. After the preferential trade agreement, that is free trade agreement. That means further the economic interaction is going to increase among the nations. After that it is custom union, after it is common market, after that is economic union. So European Union is economic union, example of economic union, whereas EFTA is neither a economic union nor a custom union. It is simply example of free trade agreement among the nations. So this is the, but be very clear that all the 4 members of EFTA, they participate in European single market. Although these 4 nations are not member of European Union, but still they participate in European single market. And how they participate in European single market? Through European Economic Area Agreement. That means these nations has signed a agreement with European Union, that is known as European Economic Area Agreement, and through that agreement they participate in European single market, although they are not part of European Union. So this is, now let me tell you that what is trade and economic partnership agreement. What is trade and economic partnership agreement which has been signed with India and EFTA. So trade and economic partnership agreement is a comprehensive agreement. It is a comprehensive agreement which covers wide range of product, like it covers trade in goods, it covers trade in services, it covers trade facilitation, it covers trade remedies, it covers competition, it covers government procurement, it covers intellectual property right, it covers investment, and it covers the dispute resolution mechanism as well. So we can say that trade and economic partnership agreement is a comprehensive agreement that covers the trade in goods, trade in service, trade facilitation, trade remedials, competition, intellectual property right, investment, government procurement, and dispute resolution mechanism, and other areas of mutual concern. So that is going to have the comprehensive free trade agreement. So now let me tell you that what is objective of this trade and economic partnership agreement. So first of all we have to understand that this trade agreement is going to eliminate tariff and non-tariff trade barriers on wide range of products. As a result, opportunity will be created for investment and trade between India and these 4 nations. Let me repeat once again. That means through this agreement, the tariff and non-tariff barriers are either going to be eliminated or they are going to be reduced on various products. Because of that, opportunities are going to be created for trade and investment between India and these 4 nations, meaning the economic interaction will increase between India and these 4 nations, because there will be reduction in tariff and non-tariff barriers. So let me tell you that what is the meaning of tariff and non-tariff barriers. So that means tariff, Tariff barriers are those barriers that these barriers are nothing but they restrict or obstruct the free flow of trade. Free flow of trade. Trade barriers are the barriers which obstruct or restrict the free flow of trade. And why it is done? It is done to protect domestic industry. The any country levy the trade barriers or impose trade barriers only to protect domestic industry. As I said that this trade barriers restrict free flow of trade, and how they restrict that this trade barriers can be categorized under two categories. One is tariff trade barriers, other is non-tariff trade barriers. Tariff trade barriers means taxes. The host country is going to levy the tax. That may be in the form of custom duty. That means tax on import. So custom duty. Non-tariff barriers means other than taxes. That may be sanitary and phytosanitary measures. So through this agreement, if tariff and non-tariff barriers are going to be eliminated or they are going to be reduced, definitely the opportunities are going to be created for more and more trade and investment among the India and these four nations. So definitely when trade will be more, when investment will be more, then definitely the capital formation will be there, and definitely there will be more and more economic growth, and there will be more and more employment opportunity. So first of all, the aim is going to be, it is going to increase the trade and investment in India. Second thing, it aims to ensure fair and transparent market access condition for service providers and investors. That means what is going to be condition, what is going to be the eligibility for the investment in India, that is going to be fair and transparent through this agreement, and it will enhance the cooperation on intellectual property right, protection and enforcement of intellectual property right. Meaning this agreement will also ensure the cooperation on intellectual property right. Not only cooperation, it will also protection of intellectual property right and also the enforcement of intellectual property right. And this trade and economic partnership agreement establish effective dispute resolution mechanism. So these are the objectives of trade and economic partnership agreement. Now let me tell you the significance of EFTA for India, that how significant these nations, four nations are for India. And if these four nations are having the significance for India, then definitely this trade agreement is going to be beneficiary for India. So how significant they are? That means there is deep economic relation between India and these four nations of EFTA. And this deep economic interaction can be understood with the facts like that these EFTA, that means four nations are 9th largest trading partner of India. These four nations combinedly are 9th largest partner of India, and they account for 2.5% of India's trade in goods. That means out of total trade in goods, 2.5% trade in goods is taking place in these four nations. Not only this, the India is exporting to these four nations, and main export items are textile, chemicals, gems and jewelry, machinery and pharmaceuticals. At the same time, India is also importing from these nations, and main item of imports are machinery, chemicals, precious metals and medical instruments. And we must have to understand the significance of these four nations in the form of innovation and competitiveness. These four nations are leader in innovation and competitiveness. We have to be that these four nations are very innovative and they are very competitive. They are leader in innovation and competitiveness. And EAFTA, that means the companies of these four nations are leader in pharmaceuticals, they are leader in biotechnology. The companies of these four nations are leader in machinery manufacturing. The companies of these four nations are leader in research and development driven technology. They are also leader in thermal related technology. They are also leader in marine technology. They are also leader in energy related services. They are also leader in financial, banking and insurance services. So when they are leader in these 9 areas, definitely when economic interaction is going to be increased between India and these four nations through this agreement, then India is going to be beneficiary from their innovation and competitiveness. That means the efficiency of Indian company is also going to increase because of FDI. That means that these companies, companies from these four nations will come with the FDI and they will come with advanced technology. And when they will come with advanced technology, then definitely there will be transfer of technology. When there will be transfer of technology, that the efficiency of Indian companies is going to increase in regard to all these sectors. Next thing is that the significance can be understood in terms of that these four nations recognize the growth of India as a world leader. That's why they support India's claim for permanent seat of United Nations Security Council. Now, let me tell you that benefits of free trade agreement between India and EFTA. That how it is going to be beneficiary, how the trade and economic partnership agreement is going to be beneficiary for India and EFTA nations. First of all, we have to understand that there will be investment flow, because in this agreement itself there is commitment that in next 15 years, be very clear, that in next 15 years there will be inflow of 1 billion, be very clear, 1 billion, not 1 billion, rather 100 billion, that means there is commitment in this agreement itself that in next 15 years there will be inflow of 100 billion investment from these four countries. As a result, it will supplement the capital formation in India. Because of that capital formation, that means that there will be economic growth or there will be increase in production. And when there will be increase in production, the economic growth will take place. Economic growth will be there. And when the production will increase, then the employment opportunity will also be generated. So because of this agreement, there is commitment that in next 15 years, there will be inflow of $100 billion. Because of that, it is expected to be that in next 15 years, there will be generation of 1 million jobs. 1 million jobs in India. That means 10 lakh jobs, new jobs will be created because of this agreement. Not only this, there will be that increase in the production capacity of economy. Not only this, because of that, there will be increase in per capita income. Not only this, because of that, that means they are going to come with the new technology or advanced technology. As I said that they are the leader in innovations and competitiveness. So they are going to come with advanced technology. When they are going to come with advanced technology, it will increase our efficiency. If the efficiency will increase, that means the cost of production will decrease. If the cost of production will decrease, our product will be competitive in the international market. If our product will be competitive in the international market, it will increase our exports. So it will increase our forex, or it will strengthen our BOP. Not only this, that means already we are leader in service sectors, but because of this agreement, further there will be improvement in service sector. And if there will be increase in service sector, further the production will take place. The production of more and more service will take place. Because of that, national income will increase, economic growth will increase, employment opportunity will be generated. Not only this, there will be some of the sectors will be benefited from this agreement, like sectors like pharma, sectors like chemicals, sectors like food processing, sectors like engineering will be benefited from this agreement because they are leader. That companies of these four nations are leader in pharmaceuticals, they are leaders in energy related technology, they are leader in research and development driven technology. So that means food processing, research and development related, they are leader in biotechnology. And if these sectors will be promoted, our dependence on China can be decreased. Our dependence of import from China can be decreased because we will be self-sufficient. India will be self-sufficient for the production of these products. Not only this, as I said that there will be joint ventures. Joint ventures will be created between the companies of these four nations and Indian companies. Because of that, there will be, that means transfer of technology. And again, if transfer of technology will take place, the efficiency will improve, that will increase our exports, that will increase our forex. Okay, and it will increase our economic growth as well. Okay, and it will facilitate the product diversification, because if the technology will be transferred, so earlier it may be that we may not be having technology for the production of particular goods or services. If we are going to have the access to that technology, we will be in position to produce that different products or different services. Because of that, there will be diversification in the products and services. Because of that, that means the Indian citizen or the Indian resident will have the access to the better quality of products, and because of that, the living standards of the Indians will be improved because of this joint ventures. And not only joint venture, it is said to be, let me clear it, that this Norway sorry, Norway is the member of EFTA, and this Norway has sovereign wealth fund of as high as 1.6 trillion dollars. That has the, please, this is very big amount, and this Norway has the sovereign wealth fund of 1.6 trillion. And this sovereign, let me tell you that what is sovereign wealth fund. Sovereign wealth fund is the fund which is access with the host country, meaning the host country can invest that fund in any economy. So let me remind it once again. As I said that Norway has the sovereign wealth fund of as high as 1.6 trillion dollars. And through this agreement, there is commitment that the investment, at least 100 billion investment should be there in next 15 years. So there is great possibility that Norway will invest in Indian market from its sovereign wealth fund, because India has a great market. At the same time, the cost of production in India is comparatively low, because the wages are comparatively less because of high high population. So the cost of production is going to reduce. Because of that, it is going to make the product more competitive in the international market. So it will benefit to the companies of Norway, as well as it will benefit to the Indian economy as well. Because if the Norway is going to invest in India from their sovereign wealth fund, then definitely it will supplement our capital formation. If it will supplement our capital formation, our production capacity will increase. If the production capacity will increase, our economic growth will increase. Economic growth will increase, meaning that per capita income will increase and employment opportunity will be improved. But the thing is, why we are expecting that the Norway will invest in India from their sovereign wealth fund? Because of this agreement. And not only this agreement, but also there is favorable condition in Indian economy. Why favorable condition? Because India has a large market. And not only this, that the cost of production in India is comparatively low. Why? Because of low wages. That's why it is expected to be that there will be wider economic impact. And how there will be wider economic impact, we discussed it. Okay, and there can also be push for the green energy sector in India. This EFTA countries are leaders in green energy. Be very clear that these EFTA countries are leader in green energy. Because of that, it is expected that they can help out the India's aspiration for green growth. Green growth aspiration of 50% renewable energy by 2030 by transferring cutting edge technology. Let me repeat it once again. As I said that these EFTA nations are leader in green technology. And India has the aspiration to develop or to have the green growth, meaning India want to have more and more dependence on renewable energy rather than non-renewable energy. And it is the target of India that up to 2030, India will reduce its dependence on renewable energy by 50%. Meaning India will use the non-renewable sorry, India will use renewable energy sources by 50% up to 2030, and these nations can help out India for this aspiration by transferring advanced technology. Now, let me tell you that what are the challenges. What are the challenges before India for this agreement? That means first of all is limited tariff benefits. What it means? The meaning is that already this EFTA nations, they are already having zero or low tariff rates. They already have low or zero tariff rates. That means they are not levying that means custom union for their imports. So if they already have zero or low custom duty, then definitely that whatever they are going to reduce, that means the export is not going to increase significantly. The export from India is not going to increase significantly with this agreement, because these countries already has the low or zero tariff rates or custom duty. Because of that, whatever is the export, that is not going to increase significantly with this agreement. Okay, not only this, there is trade deficit. India has the trade deficit with most of the countries. Why India has the trade deficit? First of all, let me explain this, that why India has the trade deficit. That India has the trade deficit with most of its trading partner, or most of larger trading partner except USA. India has trade deficit. In case of USA, India has trade surplus, whereas in all other important partners, it has the trade deficit. Trade deficit means the import to India is more in comparison to export, meaning India is importing more rather than export. So this is the meaning of trade deficit. But the thing is, why India has the trade deficit? Like I talked about that in the free flow of trade, there can be trade barriers, that can be tariff trade barriers and non-tariff trade barriers. Tariff trade barriers and non-tariff trade barriers. So trade barriers are nothing but that means custom union or tax barriers. So in case of India, the trade barriers or the custom union is as high as 18%. Be very clear that in case of India, the tariff trade barriers are as high as 18%, meaning the rate of custom duty is as high as 18%, whereas in case of developed country, it is only 5%. Because of that, what is going to be that the foreign companies do not have the access to the Indian market. Because of the Indian government want to protect its domestic companies. So this is the main reason of trade deficit or trade deficit with most of the countries, because of high custom union. They have the trade deficit. Now the thing is, let me tell you that if as per this trade agreement, that this trade barriers has to be eliminated or they have to be reduced. If the India is going to reduce this trade barriers, further the trade deficit of India is going to increase. So this is also, and the other thing is that limited market access. The other important thing is limited market access. Next is competition from other countries. The India has to face that. Another challenge is India has to face the competition from other nations. How? Let me explain it. That like Switzerland is the member of EFTA, and on 1st January 2024 the Switzerland has reduced the tariff barriers for all countries. They have reduced the tariff barriers for all countries. All countries. That means if any country want to export to Switzerland, they have not to pay any custom union. So that means through this agreement also we are going to have zero or low tax barriers or tax rates, but already the Switzerland has facilitated this opportunity to all the countries. Because of that, now India has to face the competition from other countries as well, and this is also a challenge before India. Now this is all about our today's session. If you like this session, please comment, share and save this. Thank you very much, dears. Thanks a lot. Today we finish here only. Thank you very much, dears. Thanks a lot.